everyone, I'm the Tax Pro, and today we're going to talk about creating bills in QuickBooks Online. So what exactly is a bill? Why would we use a bill versus an expense? A bill is going to be where you're entering a charge from a vendor that you haven't paid yet. Okay, so with an expense, when you purchase something or you purchase a service, you're going to pay for that item or service at that point in time. That's an expense. You're recording to that specific expense. At the same time you're paying it, you're telling QuickBooks Online what account you're paying it from. A bill, on the other hand, you're saying, hey, I've ordered these products, I have this service, and I'm going to owe this person money later down the road. Okay, so that's the difference between a bill and an expense. A bill is going to increase your accounts payable. So what that means is that you are going to have an item recorded in QuickBooks saying that you owe somebody money. And that shows up in accounts payable on your balance sheet. So your balance sheet, there's going to be an area under liabilities that says accounts payable, and that's going to have a balance. Okay, let me show you how to enter a bill. So the easiest place that I like to go is this plus new button. I'll show you where else you can navigate to enter a bill, but you're going to select bill. Remember, you don't want to do expense because that means that you're paying for something at the time that you're recording it. We're just going to record something that we're going to pay later. So you're going to click on bill, you're going to select your vendor, then you're going to select your terms. So let's take a look at what our default options are. Okay, so we have due on receipt. That means that we have received a bill and we're supposed to pay it right away. So let's say that we have the bill date of 10/2. If it's due on receipt, it's due on 10/2. We could have net 15, which means, well, it's going to be due in 15 days from when we receive it. Net 30 means that it's due in 30 days. And net 60 means that it's due in 60 days. So I'm going to say net 30. Notice how it's put 30 days from that date. Keep in mind that if we use net 30, it's going to be 30 days. It's not necessarily going to be a month, right? You can also have a new system, so due in a fixed number of days, due by a certain day of the month, due the next month if issued within so many days of due date. Like there's all these different ways that you can set up terms. The ones that we're seeing here are just the default in QuickBooks. So you can set up all sorts of different terms. Now we're going to put the bill number. It's really important that you put the bill number. I'm just going to make one up. But this bill number you will reference potentially when you remit payment, right? So you may have a vendor that wants you to provide remittance. If let's say that I have, 7 different bills and I'm going to pay 5. I need to tell that vendor, hey, this is what I'm paying. You're then going to go in and do a category. So let's just call this shipping. This is maybe a vendor that assists us with our shipping for our products. They charge us $987. For October, we can put a description in here. So let's actually say this was for October's shipping memo. You can put in, so this description is going to be more for the line item. This memo is going to be more a description for the whole entire bill. You don't have to put anything here if you don't want to. And then you can have attachments. You could actually upload a copy of the bill, sometimes helpful if you want to pull it up at a later date. So that is how you enter the bill. Now, if you are operating on the accrual basis instead of a cash basis, you want to make sure that you are putting the bill date on the date that you have received these services or these products, right? So if this shipping was actually for September, they may say, oh, this is, actually for September's date, and then maybe it's not due until the 2nd of November. That's okay. And then maybe this actually becomes September. Oops. Maybe this becomes September's shipping. That's okay. Recording this bill date on September 30th, this is going to put this expense into the proper month, okay? If you're operating on the accrual basis. If you don't know what that means, or if you're not sure if you need to be operating that way, you're okay. You don't need to understand that right now. Just know that if you pull a profit and loss on the accrual basis for September, we've now pushed this particular expense into September instead of October because we dated the bill in September. Okay, so then we can go to save and new or save and close. I'm going to go ahead and click save and close. That bill is now there. If we are to go to the vendor section of QuickBooks Online, we would be able to see we have an open balance here. We can see an open bill right here. So we can click on this. We can see the open bill right here, this $987. And if you are in here and you don't want to utilize the plus new button, there's a couple of other ways that you can also enter bills. So you can come to the expense area and you could do bill here, new transaction bill. This is going to give you a list of your bills. You can add a bill, okay? So these are bills to review. We don't have any to review, but we do have some unpaid bills here. So you can go in and see, okay, what do we have that's unpaid? You can go in to the vendors, and you can create a bill next to that particular vendor. You can also create a new vendor here. So you can enter bills multiple different areas within QuickBooks Online, especially in this expense area. I personally just like the ease of clicking plus new and then bill because you can do it wherever you are within QuickBooks Online. So let's do a recap real quick. Bills are for entering expenses that you have not paid for, right? So that can be kind of confusing because we also have this handy little expense button. In QuickBooks, expense means that you've paid for it at the time of purchasing it, okay? We have, and a lot of different businesses, they have items that are purchased and then you don't pay for them right away. That's going to be a bill. So you create a bill when you do that. When you create a bill, you're going to go ahead and put the vendor, you're going to put the bill date and the due date. The bill date is important because it is going to tell QuickBooks what period to record that expense in for an accrual-based report. And then the due date is important because it is going to tell you when that bill is due. So you can go in and see in this bills tab, which is right here, expenses, bills. So in this bills tab, you can see what's been unpaid. You can filter by the bill date. You can see like this is due in 31 days. It's going to tell you when it's due. You can sort by status if you wanted to, so you could see bills that are overdue or bills that are coming due. And then you can go ahead and pay them either through QuickBooks or through a different system. But that way you're paying your vendors on time. You can utilize QuickBooks Online to help you have good terms with the vendors, good relationships with your vendors. Make sure you're timing the payments appropriately. So that's a bill within QuickBooks Online, and I will see you guys next time.